Are you tired of watching your money disappear faster than a magician's rabbit? Well, I've got a super simple trading strategy that's going to turn your losses into lucrative wins. This strategy is easy and even your grandma could do it. We're going to use just two simple indicators that are going to be your secret weapons to trading success. I'll show you exactly how to set them up on your chart and how to read them like a pro. No more guesswork, no more stress, just pure profit. Next, I'll reveal the magic formula for entering and exiting trades. These rules are so straightforward and you'll wonder why you didn't think of them sooner. To prove that this strategy isn't just hot air, I've backtested it to the nines. I'll share the results with you so you can see yourself how powerful it can be. You'll be amazed at the constant profits this strategy can generate. So, are you ready to take your trading game to the next level? Let's dive in and start making some serious money. First, we're going to add a supercharged indicator that's going to help us spot prime buying opportunities. This indicator is called the price and volume breakout buy strategy. It's like having a secret weapon that can predict market moves. To add this bad boy to your chart, just head over to the indicators section and click on the indicators icon, and a pop-up window will appear. Type in price and volume breakout buy strategy and hit enter. Once you find it, click on it to add it to your chart. So, how does this magic trick work? Well, this indicator is designed to identify stocks that are about to explode higher. It looks for a combination of price and volume breakout within a specific range of candlesticks. This means that the stock's price is breaking out to new highs, and there's a surge in trading volume, indicating a strong buying pressure. The strategy is especially effective for volatile charts with big price swings. So, if you're looking to ride the wave of a hot chart and score some serious gains, this indicator is your go-to tool. Now we're going to tweak the settings of our price and volume breakout buy strategy indicator to make it even more accurate. First, let's go into the settings window. Here, we'll adjust a few parameters to fine-tune the indicator's sensitivity. Set the price breakout period to 9. The settings determines how many candlesticks the indicator will look back to identify a price breakout. A higher number means a more conservative signal, while a lower number can be more sensitive. Then change the volume breakout period to 9. The setting controls how many candlesticks the indicator will look back to identify a volume breakout. A higher number means a stronger volume confirmation. And then change the trend line to 21. The setting defines the length of moving average that the indicator uses to identify the trend. A longer length can smooth out the trend, while a shorter length can be more responsive to price changes. Finally, set the order direction to long and short. By setting the order direction to both long and short, we're enabling the indicator to identify potential buying and selling opportunities. Next, let's clean up the look of the indicator. Go to the Style tab and disable everything except the lines. Change the color of the lines to something bright and eye-catching so they stand out on the chart. Now here's the magic. When the price moves above the moving average line, the indicator will draw a horizontal line. This is a bullish breakout signal, telling us that the price is likely to continue moving higher. While the price and volume breakout buy signal is a powerful tool, it's not foolproof. Sometimes the market can produce false signals, especially during sideways trends where the price fluctuates without clear direction. To avoid these false signals, we'll add another layer of protection, the RSI Histogram. To add this indicator to your chart, just head over to the indicator section again, and this time type RSI Histogram into the search bar and hit enter. Then select the RSI histogram from the results. So voila, it will appear on your chart, ready to provide valuable insights. Think of the RSI histogram as a market sentiment gauge. The RSI histogram is a cool twist of the classic RSI indicator. Instead of the usual RSI you've seen before, this one uses a histogram and operates on different scales from 100 to -100. It also has some extra features like smoothing the RSI with moving averages like HMA, JMA, and KMA. But before we put the RSI histogram to work, we need to do some quick optimization so we can use it as a confirmation indicator in our strategy. Here's what you need to do. In the settings window and in the input section, change the RSI length to 21. the moving average length to 14, and make sure the source is set to HL2. Next, pick KMA as the moving average type and set it to 3. Lastly, turn off the colors bars and the style tab, and you're good to go. With these settings, the RSI histogram will be ready to help you confirm those trading signals and take your trading strategy to the next level. So, let's take a look at this example. You can see that the price candles are above the moving average line, which tells us we've got an uptrend in the market. Now notice the breakout line on the chart. When the price closes above that line, we've got ourselves a buy signal candle. But we don't stop there. We need the RSI histogram to confirm it. If the histogram is green and above the midline, it's a good sign that there's a bullish sentiment in the market. That's our confirmation for the buy signal. As for managing risk, you can set your stop loss just below the moving average line or the recent swing low. For the target, aim for 1.5 times the risk of the trade. This will help ensure that your potential reward is worth the risk you're taking on. Now let's take a look at an example where this strategy helps us avoid low potential trades. Here we've got a bullish breakout on the chart, but the RSI histogram is red. That's a warning sign that this signal might not be the best entry point. By paying attention to the RSI histogram, we can avoid these types of low potential signals. The sell trade rules for this strategy are just the opposite. You'd be looking for the price candles to be below the moving average line, indicating a downtrend. When the price closes below the breakout line, you have a sell signal candle. Then check the RSI histogram. If it's red and below the midline, you have confirmation for the sell signal. Alright, it's time to see how this strategy performs in action. The results are in and they're absolutely mind-blowing. We ran a backtesting experiment with 100 trades on a 5-minute Ethereum chart. And get this, we scored a massive 71% win rate. That's right, the majority of our trades were profitable. But wait, there's more. We managed to pull in an outstanding 115% profits on the spot market without any leverage. All with just 3 weeks. Can you believe that? Now let's talk profit factor. It's an impressive 3.67, meaning our strategy is doing an excellent job of keeping those profits up and losses down. During our testing, we saw 8 consecutive wins and only 3 consecutive losses, providing the strategy's consistency and reliability. Finally, our max drawdown was a mere 2.97%, which tells us that our risk management techniques are spot on, keeping our account balance safe from major downturns.